Hi, everyone, and welcome back to the next session in Stream 2, which is going to be a panel discussion, Embracing Digitization in Client Onboarding. We've got a stellar panel waiting for you, so without any further delay, I'll hand you over to the moderator. Over to you, Ed Ackerman.
Thank you very much, Dill. Hello, I'm Ed Ackerman, Partnerships Director at Onfido. Customer onboarding has never been so relevant. The way we interact with businesses has been going digital for a long while. Bricks and mortar experiences are very much changing and in many respects are on the wane. COVID-19 has accelerated the pace of change. For many of us, digital has been the only way to sign up for new services. For these reasons, I'm really excited to get the thoughts of our esteemed panel on this topic. Over the course of this session, I'll ask the panel a series of questions, and you can submit your questions via the chat box. We'll aim to respond to as many as possible as we go through the session. Let's start with some introductions. First up, hello to you, Vincent White.
Hi, Ed. I'm dialing in from sunny London today.
Great to hear it. You are a UK director of Facepoint, a French technology firm which combines a database of high-risk individuals with a state-of-the-art biometric engine. Vincent has expertise in screening and KYC from a background at WorldCheck and WealthX, and is now focused on extending the application of biometrics from identity verification to watchlist screening. Next up, a big hello to Greg Watson.
How you doing?
Very well, thanks. And where are you calling in from, Greg?
Calling in from equally sunny Kent today.
Lovely, lovely stuff. You're currently Managing Director of Sales and Global Head of Corporate and Institutional Banking at Fenergo, the client lifecycle management technology for financial services. Greg is steeped in the finance industry, having previously worked at HSBC, where he was Global MD of Banking Middle Office, and also at UBS as Chief of Staff. Next up, hi, Anton Nikai.
Hi, everyone. I'm calling from Stamford, Connecticut, but usually based in New York City.
Great, a touch of international glamour for the panel. Thank you, Anton. Anton is VP of KYC at Bank of China, where he's worked for almost 3 years. Anton's been in the industry since 2006, focusing on know your customer and anti-money laundering operations. And last but not least, we have Eric Morgan. Hi, Eric.
Hey, Ed. Calling in from London.
Fantastic, as am I. And you are Managing Director of Global Due Diligence at RBC Investor and Treasury Services. Eric has over 20 years of industry experience designing, building, and successfully managing know your customer and anti-money laundering risk management and quality assurance teams. Fantastic. So that's our panel, and I'll dive straight into our questions from here. Just to set you up, I suppose the reason for this panel is there are a whole host of innovative new approaches to customer onboarding, which in many respects are helping businesses to wow good customers and keep bad apples at bay. Whether with new technology, processes, or organizational design, we're seeing dramatic changes in the way companies engage customers for the first time, from identifying them correctly right through to completing enhanced due diligence. And for the purposes of this panel, let's think about that entire spectrum of identity verification right through to enhanced due diligence. So my first question for you, and maybe Greg will start with you, is are we at the stage where these advances are driving meaningful business benefit in the know your customer and customer onboarding journey? And if you can share any examples as we go through, that would be great.
Yeah, sure. I think it's a little bit of a mixed bag. I mean, I think the challenges that we see out in the market sort of remain the same. That the client experience is still I think clunky. I think the operational inefficiencies are still fairly prevalent, and I think actually the regulators' view on it is that banks are still not doing a good enough job in the space. You look at something like periodic refreshes of KYC, and it would seem to us that the holy grail of moving to a much more of a trigger-based model is the answer, but most are all still on that journey. And I think at the current state, it feels like you're not seeing the wood for the trees. So, are you really managing the financial crime risk? If you look at some of the results of larger banking organizations and their material findings rate, from a year's cycle of refreshes, it's incredibly low. So it just shows you there's a huge amount of activity that's happening in vast operational teams, often offshored. That's really a little bit of a a tick box exercise, I guess, to say the least. So I think there are some that are definitely getting it. Those who are starting to adopt frictionless processes as much as possible, and by that I mean in a wholesale sense, looking at your front to back client journey for a KYC refresh or a client onboarding, and just looking for areas of automation. And it would be disingenuous to say that, in a wholesale sense, you're going to see anything like, 60-70% of STP when it comes to these processes. But there are certainly areas for automation to be achieved. And, if you could achieve 10, 20, 30%, then you're really getting ahead of the curve. And I am starting to see some banks doing that, and which is impacting all those three elements I mentioned before in a positive way.
Interesting. So, and your point is getting people from the start of the process through to the end is not necessarily prevalent everywhere.
No.
Enzo, maybe to bring you into this, what are your thoughts?
So I would strongly agree with Greg that while the technology advances have reached a point where you are able to actually perform a KYC refresh with very little touch point from the customer, the processes built in place, confirming to the regulations, right, of these periodic refreshes, for example, are focused on operational teams, pretty much following the existing processes in place. And sometimes, without making use of these technologies and these automations that currently exist, to make this a very seamless as possible, right, customer automation, focusing on pretty much potentially on a higher risk customers, right, without applying the same approach, like in regards to the process or timing to these other customers as well, right? For example, while the typical periodic refresh in the industry, like it's 1 for high risk customers, going to 2 years for medium and 3 for low risk customers, right? On whether on wholesale or retail, right? That approach may not be as efficient, right? Where again, a lot of resources are being devoted to these processes, and where potentially they could be devoted more to the high risk customer base, right? And then relying on these trigger based reviews in conjunction with the negative media and PEP reviews, right? So you can focus on on the bad apples, right? Where potentially, right, these few bad apples that could damage the risk and reputation of the institution.
Interesting. Thank you, Anton. Wonder, Eric, if you have any thoughts on this point.
Yeah, hi. I agree with what's been said. I think we're still surprisingly struggling after, probably close to a decade of moving into this space. And that's a collective struggle. We've tried utilities, we've tried a number of different approaches and seem to still have difficulty finding the solution. I think part of the challenge in that space has been the traditional understanding of what digital means. I think if you look back historically, the term and definition around digital has evolved and changed, and our expectations have evolved and developed. And so I think part of where the challenge lies is making sure that we get on the same page as to the end goal and what we would like to achieve. I think the comments that have been made around the customer journey and the issues in that space are 100% valid. We do need to create a better experience and journey for the customers, and that has proven to be an immense challenge. But in order to do that, we need to collectively be on the same page on what a digital experience means, and I don't know if we're there yet.
Interesting, thank you. Well, even if you don't necessarily know who, is anyone catching your eye in terms of this customer journey piece whilst taking stock of all of the necessary requirements that Anton outlined? I don't know, Greg, if you're seeing this being done well anywhere.
Yeah, I mean, there are definitely some that are more innovative than not. I think where there is some real opportunity is that interface with the client. And I appreciate there's some fairly large differences, as other folk on the call today will attest to, between, say, a big FI or a fund manager and a corporate in terms of the way that you engage them. And I think it's interesting that Eric picked up about the utilities. I think utilities have promised so much and delivered so little. And it's not because the idea is a bad idea. It's just, it doesn't seem to be that collectively, and many of us have been part of them, we've got the right answer. But I think that client experience piece, whether it's via, portals or some other channel, there's got to be a way to take out the friction and to be able to demonstrate to clients that you have expended every possible way to source that data in some intelligent fashion, either through data feeds, registries, etc., and internally leveraging what you have before you go and bother them. And I think, unfortunately, the default setting for a lot of organizations is they can't find the information, they can't process the information intelligently. So the default setting is go to the relationship manager or similar and ask the client for it all again. And I think that's just, one of the worst experiences you can get. So that's where I think there's a lot of opportunity and some relative quick wins to be had if you get the channel strategy right.
Thank you. So, part of the process is obviously what is the innovation that you're putting into that business and driving the impact. But a large amount of it is going to always be down to the implementation phase. That programs such as these, are make or break, really. So how do you go about engaging teams, your business teams or those you consult, to deploy a successful solution like this? I'd love to hear again sort of any best practices here around cultural change or seeding innovation into the business successfully. And maybe Anton, we could start with you.
Sure. So in my opinion, like in the retail space, we are relatively on a good space where there is on the customer refresh or customer touch points, right? I think a lot of good work has been done to make this a very seamless process, right? Where for the most part, as an individual consumer, I usually do not hear from my financial institution, right, in regards to KYC events, right? Because most likely, at least my financial institution, based on the information they have from me, the transaction activity, etc., they're able to create the baseline and understand kind of really who I am and what I do, right? So in 13 years, I've had, for example, a personal account open. I never heard from anyone, in regards to KYC events. On the wholesale, which I think, again, we're talking about more sophisticated customers. Unfortunately, I think there is a long way ahead, like in regards to using these technologies, right, and these automations that possibly exist to make the experience more seamless, for the wholesale customers, and focus in kind of really the due diligence of the touch points on potentially kind of really high risk products where the bank may need some additional due diligence, right? So for example, if you're offering certain vanilla products to the customers and you have a good understanding of who they are, right, there would be like little touch points. But in the event, for example, the customer expands into new products and services with potentially a higher nexus, for money laundering, or potentially higher risk countries, and jurisdictions, right, where some additional steps may be required. I think still here there are a lot of inefficiencies kind of really taking place, where whether it's a utilities teams or customer onboarding or relationship managers, right, a lot of efforts are kind of really being spent. And I think, again, the infrastructure, right, should exist, like in the place and technological wise, to allow for these automations should be brought in. But I also would agree that the biggest challenge remains the changing of mindset, right, and people being able to see the value that these technologies kind of really bring, and even if it's for, let's say, a short time, you kind of really have these dual processes, right, to make sure that these technologies are actually achieving what they're supposed to be achieving, and then kind of really you slowly transition, right? But I think winning people over, it's a very big part of the process and the success.
And how do you convince people that change is going to have the kind of impact that we all hope it will? We're obviously relatively resistant to change to begin with, and you want to see sort of immediate impact. So are there ways that Eric, question for you maybe. Are there ways that we can deliver some short-term wins to get people excited about those longer-term gains?
Yes, I think there are, and I think that's really the key. What we've tried to do historically collectively is kind of a big bang, and we painted a picture or a future that we were hoping to get to very quickly, and that would change the landscape significantly, literally overnight. Now, all of that was dependent on basically technology delivering a huge amount that it wasn't able to deliver as quickly as our expectations were able to request new additions. So I think there are a couple things. One, we need to be very, very clear on exactly what we want to deliver and make sure that our stakeholders and customers agree with that target. Because often what we do is deliver something that benefits a specific area, but doesn't necessarily benefit anyone else. And so the customer, other stakeholders, other areas of the organization struggle to understand the overall benefit to the organization and therefore presume that it didn't benefit anyone. And so I think a very clear incremental plan with agreed goals that can start to roll out items across the organization and then articulate the benefits. And I'll give you an example. Maybe a single unique identifier for a customer. Now, the benefit to that is in account opening, obviously payments, reference, future KYC, incremental product opening, etc. You would be able to point back to whatever the name on the account is or the name of the entity and how that can morph or change through systems and inputters could be referenced to an exact individual or legal entity. And that's really, really important. We can all see the benefits of that, but often we don't put that front and center in the process that we're trying to achieve. And that's just one example. There are other examples where that could be used not just in controls, but in other processes. But making sure that the plan is clear, concise, and agreed, I think is key. And then be realistic on a time frame and make sure that whatever was agreed is actually delivered, and articulate those success criteria, making sure that everyone agrees that they actually are success criteria could really help in delivering this. Now, a lot of this is simple project management 101, but I think that's sometimes where we've come unstuck. We've gotten either too myopic in the strategic goal and failed to recognize the importance of collective understanding of where we were going.
Yeah, thank you, Eric. And you're right. Often the basics are the most critical things, keeping that scope tight, making sure that we communicate effectively and getting people's buy-in at each step of the process. What do you think, Greg? Anything to add?
Yeah, no, I'd agree. I mean, it's like big projects. If you go for big bang approaches, it's going to deliver benefits in 3 years' time. It's going to be a struggle, and I think you want early wins. And even if they sound a bit underwhelming on the face of it, they're much better to get something in and get the momentum going, because that starts to excite everybody. I think the other thing is, you do have to have a target. It's important to kind of force the issue to have a target, and you only get a target by understanding your current. And I know that sounds like an advertisement for another consultancy engagement, but that's something you can achieve internally. An important discipline to go through. And then the last thing I think is you should bring the customer in. Probably the most insight that I've ever gained when I was a practitioner was to actually go and interview a whole bunch of customers, and it was both horrifying but also incredibly enlightening to hear their views, but also to understand what they thought good looked like. And just by engaging them, it brought them into the process and actually made the outcome a lot better. And they helped us get to the destination. So that would be my other steer.
Yeah, very, very good advice, and also a great way to make sure that you're constantly keeping to your scope and getting feedback from the customer along the way. So thank you. Sort of switching focus a little bit here, we as consumers are increasingly looking to access goods and services online rather than in branch or via snail mail, for example. And this has been very much accelerated by COVID-19. Businesses who aren't able to onboard customers digitally are often missing out in this new world. And it seems the industry is betting big on biometrics to deliver this welcome experience. Whether opening an account with your face or authenticating, it's often about you and your biometrics, and increasingly less about what you know. Starting with you, Vincent, on this one, where are you seeing biometrics playing a role in the onboarding process? And if any, what are the risks of such technologies and how can you mitigate those?
Well, just to start by, I wish I was more controversial by agreeing with what's been said already, that there's obviously a very clear appetite from customers to have the frictionless, accelerated journey. And while there have been some incremental process improvements in KYC, there are still significant bottlenecks which may be overwhelming or not delivering the promised rewards. I'm very mindful of how things have changed since the crisis. Before the crisis, the European Commission was deliberating about whether to impose a 5-year moratorium on biometric technologies as a somewhat panicked reaction to the incredible pace of change. And there's understandable concern with respect to data protection, in particular, opening the floodgates. And we see this in terms of the response to the Met Police's live facial recognition trial, which caused uproar. And that's not because it's really invasive. It's no different from CCTV being used for security or crime prevention, and people got used to that. It's a reaction that's based on not understanding how technology is used or its effectiveness. And for starters, there are lots of factors that determine the performance in terms of the true positives and false positives that we are familiar with in conventional screening and matching systems. But a lot of this is dependent on scoring thresholds. Biometrics as a type is indisputably superior to using alphanumeric labels like names and dates of birth and so on. And certainly compared to the Mark I human eyeball, if you think how unreliable eyewitnesses can be. So the issue is much more about the pace of change and people needing time to adjust in terms of their receptiveness to new technology. But the COVID crisis has brought to the fore one of the positive applications. And we're wrong-footed because we can't update and adapt regulation fast enough. And you see this in other places too. For example, the iterations in money laundering directives, and the GDPR itself is a long overdue necessary refresh, which is catching up to a world that's changed dramatically since the digital revolution. So we certainly need to have more clarity for biometric applications, and regulation is a mechanism through which we create safeguards and prevent misuse. But we don't need to overreact and throw the baby out with the bathwater. And that's just a perennial point about all new technology.
Yeah, thank you, Vincent. And maybe, Eric, I'll ask the same of you. Is we've touched here on regulation, we've touched on technology and the need for this technology in a time where almost every interaction necessarily has to be remote. What are your thoughts on the direction of travel regarding biometrics?
Yeah, I think for the most part we're headed in the right direction. I'm not sure we're necessarily ready for it. And while I agree that the pace of change has at times seemed very quick, I think we tend to react to that sometimes negatively. And it worries me a little bit, because when we do that, we kind of assume certain elements or outcomes that may or may not be the case. And they're also, most of those assumptions tend to be based on the historic attempts to resolve that. Whether or not that's a valid view, I guess time will be the ultimate decider. But I think we do, if there's one thing that in my view, the COVID crisis has certainly taught us, is we need to be more open to options. And we need to be looking at a plethora of options and deciding what, as an organization or as an industry, we should be channeling our money, our time, and our energy into. And I do think we need to do that with renewed focus and attention. And I'm not sure that that's always been the case. It seems to me that as an industry, we felt like we have an infinite amount of time to change and move to a new position. And maybe we don't objectively believe that, but I think the collective actions of the industry certainly can point in that direction at times. And that's a bit worrying. And to the point that was made, I think you can take all of that and probably magnify that a bit once you get into the regulatory space. And it's certainly hyper conservative, as we would hope it would be, but I think we do need to be more innovative in how we're approaching things. And I think COVID has shown us the importance of that innovative thought.
So just picking up on that, Eric, then is your thought that we have been maybe a little bit complacent with some of this activity, and COVID has brought to our attention that we perhaps needed to act sooner on some of this optionality that you're talking about?
I don't know if we collectively have been complacent. I think individual organizations have moved forward. I think what we're, especially because we tend to work in a regulatory space, we look to the regulator to give us the nod or the go-ahead or the green light to move things forward. And I think maybe we just need more collaboration with the regulator to make sure that that move can happen faster and ensure that we're doing that in a controlled way, that we all want the industry to be protected and insured. And I think we need probably a bit more openness in the space that would be helpful. I'm not sure that as an industry we've been as open to the challenges that are actually out there. And I think our customers are well aware of that. And I think we probably need to listen to the customers a bit more and work with the regulators to figure out what we can do to once and for all resolve some of these issues.
Yeah. Thank you. Anton, bringing you into this topic, any thoughts from your side?
Sure. So I would agree with Eric that I think sometimes, and most of the time, right, you have regulators kind of really driving these processes, right? They're pretty much the requirements, and sometimes sometimes technology moves faster kind of really than regulation, right? So I would say best practices from the industry in line with kind of really potentially what consumer wants, right, and what can be achieved. Sometimes, the industry as well should kind of really get together, right, and provide and share with the regulators, right, in terms of why a process may be absolute and why certain technology kind of really may be appropriate at a certain time, right, to kind of really mitigating the risks, that the regulators are trying to, that the regulators are focused on. And I think the other important point is that these technologies, right, sometimes, they open the door for fraudsters as well, right? So I think having the appropriate controls in place, right, to not allow that, because it impacts both kind of really the consumer experience, right, and also the bank, right, potentially exposing them to kind of really losses. But I definitely think it's a mixed bag, right, in terms of the success, of the technologies that already exist out there, and I think the current situation with COVID-19 has put things into a new perspective where, to your point, right, people are putting more of the thoughts into the processes and how, technology can potentially use better.
Thank you. Good. I'm going to ask my last question now, which is very much a nod to the future. I'd like you to get your crystal balls out and have a look in there and see what you find. So, where do you see customer onboarding heading in the future? And are there any emerging themes that are getting you excited today? And let's start this time again with Vincent, if that's okay.
Okay, so the way I see things going, there are concerted initiatives on the positive identification side of KYC. So that's a sort of initiative such as the Open Identity Exchange, building on strong customer authentication from PSD, IDES, EID, and a fifth directive, fortifying identity verification and ownership. And I think there needs to be a corresponding matching of that on the risk side of the coin. So an overhaul of KYC through the extension of biometrics into screening. So biometrics is well established and prevalent in identity verification. There's a mass adoption stage, but the vast apparatus we see in large organizations that is involved in processing and remediating watch list alerts should be an indication that something isn't working. And that's, to me, the elephant in the room, or the bottleneck I alluded to earlier. It's such a huge chunk of KYC budgets and of AML budgets overall. And the reason it is happening is simply a nature of the territory or nature of the beast problem. And that's because we choose to use alphanumeric identity fields, and they are riddled with all sorts of problems, not least that the nature of names are highly homogeneous in all languages in the world. We create all sorts of problems from shoehorning other languages into English, so we transliterate and have to deal with syntax variation. And as a consequence, we have to introduce fuzzy matching in order to cope with these variants. So it's a problem of our own making, and we do so because of risk aversion. We're averse to having potentially mismatches, and the consequence is a mountain of work, of resolution work that needs to be done. So to me, it's now very that we should be using biometrics to do watch list screening, and that will also deliver not just a massive reduction in the resulting output, but all of those tick all of those boxes in terms of accelerated frictionless customer journey. The final point is that the way things are at the moment, everything is predicated on identity verification. So if you can pass yourself off with someone else through falsification of identity, then that renders the subsequent screening process redundant or futile. So we should be using a more reliable identity denominator, some kind of biometric, simply because biometrics have more information in them. They are more unique, and they're almost impossible to falsify. So the direction of travel for me is very clearly one towards, notwithstanding, serious debate and deliberation about how it can be used in an effective way and regulated in an effective way, we need to catch up with that technological advancement and start to enjoy or reap the benefits in KYC that we've already seen in other areas.
Just to touch on that, are you seeing examples today where faces can be pulled up for watch lists and then compared with the individual? Are you seeing companies execute on that successfully today to set aside this issue that you've mentioned around fuzzy matching of names and dates of birth, for instance?
Yes, that's what where I work at Facepoint, that's what we're doing. So we're working on this next generation, same sort of principle as the way screening works now, but you simply use the face as the primary identifier, and it's a logical extension from identity verification, except if you're then going to check against PEPs and sanctioned entities and terrorists, why not do that with something that is extremely difficult, if not impossible, to falsify?
Thank you. Greg, same question to you. What emerging themes are looking good to you?
Well, I think, with COVID, I think the world will change. I guess it's difficult to understand where we'll be in a year's time, but certainly what we've seen is an acceleration of digital. And I was watching an interesting article on CNN the other day, on news section on CNN, talking about Japan, where we do a lot of business, and they were saying that despite outward facing views that Japan is fairly advanced from a technology perspective, one of the reasons they've struggled with COVID is largely because of their reliance on fax. And facsimile also with hard copy of documents means that they're very slow in what they're doing. And so there were no plans to change that materially, but all of a sudden the government is putting in place initiatives to fundamentally change that. And so it's a good example, I guess, to the point around regulator resistance or regulatory resistance about some of these things. And I was looking at a stat the other day about the number of clicks it takes to open a bank account in the UK, and I think someone like Monzo or similar were right at the top. And some more traditional high street banks were at the bottom, but the difference was just mind-blowing in that. So I think what will happen is the appetite for more innovative technologies will accelerate, and that's going to bring a change to both retail and wholesale banking. I think in the wholesale space, the acceleration of a movement towards more automation around KYC and that frictionless process and all of those various things, and maybe even a little bit more appetite around a utility 2.0 or 3.0 type concept will happen. But the good news, I think, for all of us and all of our listeners here today is I think it's going to just change appetites, opinions and views. And so I think Eric's point, the technology is largely there in a lot of places. It's just the way it's being deployed and the appetite for that deployment.
Yeah, thank you, Greg. Anton, what are your thoughts?
So I think, again, the change has been accelerated, by the COVID-19. I think, we will see technology being deployed even more heavily on the retail space, especially like in the US, and making use of these technologies. I think, like on the wholesale as well, that like change will kind of really will happen, and again, I think the utilities teams, have to evolve, but change also kind of really, it's driven by the top, right? So meaning the top has to understand that the changes and how everything has evolved, and the stakeholders have to be properly informed, of the benefits of these new technologies, right? And I think on the final note, I think the risks as well have to be mitigated, right? So potentially, while technology is being used on the front end, right, to kind of really perform these onboarding or KYC refreshes, on the back end, when I say the back end, on the background, the transaction monitoring and all these other processes, that happen, whether it's screening, etc., like even better technologies, right, needs to be deployed, and in real time, kind of really, where possible, kind of really screening to mitigate risk, right? So for example, if you have suddenly a customer who becomes higher risk, right, it's kind of really, it gets prioritized, right, and kind of really on a more human kind of really review versus kind of really the relying kind of really on the screening piece.
Thank you. And then Eric, lastly, take us home.
Yeah, hi. So I think what's going to end up happening is we will get a convergence between the digital personal ID, so that each of us has or potentially has, and that personal account we can open, and a corporate ID. And how that will happen it's already started to happen with the Fifth Directive and the identification of beneficial ownership, databases, etc. But I think ultimately what's going to happen is a digital profile will be created in the wholesale space, and that profile will assist significantly in the control and customer onboarding activities that all institutions need to undertake. I think this will probably be assisted both by the regulators and the regulation, as well as a utility. And I think we'll see a second bite at the apple for utilities. And I think maybe it will finally be time for utilities to succeed. It's not just about the digital profile and information that needs to be captured. There will also need to potentially be some alignment of legal views and perspectives that are required around the corporate entities. So it's a big change, but I think we will start to get there incrementally, and it will be accelerated by the COVID-19 crisis.
Thank you. Thanks very much, Eric. So really, thank you for the panel, to Vincent White, to Greg Watson, Anton, Nikai, and Eric Morgan. Thank you for all of you for your questions. We got to as many as we could over that session. Really instructive session there, where we covered everything from whether the technology is here and is working, to whether we are working effectively with regulators, and what's happening next in terms of biometrics or utilities and beyond. Very much hope you enjoyed the session, and we'll leave it there. Thank you very much.